Let's discuss all of that and more with Chakri Lokapriya. He joins in the show right now. Chakri, hi, morning. Good to have you as always. Chakri, two moving parts, especially when it comes to the commodity construct, and I'll come to equities in just a bit. A, the rip-roaring ride that you're seeing in metals, and B, the uptick in crude, which for now the market is sort of ignoring, but just wanted to get sense of what you make of the move in metals so far.
Good morning. Thanks for having me. If you look at what's happening both domestic and globally, and in the case of metals globally, is the US data has come out actually kind of stronger than expected. Their services are weaker, but kind of the economy has bottomed out. It continues to be strong. Similar data coming out of China, etc. So, which all this means that cyclically, commodity prices will start moving up, with industrial activity picking up both in domestically and outside. Like copper and other commodities have already moved up and will continue to move up if this industrial activity holds up. I think that is now being reflected in the stocks, both domestically as well as outside India. And so I think, and they've also underperformed. So I think it's time to look at them as well.
All right. And let's get take as well on some of the updates that we've got within the banking space. The kind of Q4 updates from the likes of South Indian Bank, RBL, etc., seem to be fairly encouraging. What's that indicative of?
Indeed, absolutely. And all this data clearly shows that manufacturing activity, capex, industrial is where the largest loan disbursements have been in India, and therefore companies banks which cater to that, which is largely the public sector banks and some of the private banks like, to an extent, maybe RBL, those are the companies which will disproportionately benefit from this current move.
All right, let's move right on and get in a take as to what the outlook is when it comes to the consumption space. And Chakri, wanted to get in your thoughts, given the fact that we have seen a lot of focus on the premiumization trend. How is it that you're looking at some of these companies within the consumption space?
You're absolutely right in terms of premiumization, and the demand still seems to be urban versus rural. There's no change in that, and so which is all the urban consumption, consumer durable plays will continue to gain traction, not just tier 1, but also tier 3, tier 4 cities. And so which means companies like Voltus, summer's going to be hot, it seems. Even Crompton Greaves, which has kind of underperformed very significantly. Those are the kind of companies that I think we'll begin to look at.
Right. Okay. In fact, Macquarie has come out with a note on the consumption basket. They're maintaining a neutral stance on Dabur as well as Britannia, while an outperform on Unilever and Marico. Let me take it across to Vinny and understand the rationale behind all of this is. Vinny?
So absolutely the rationale that we're seeing behind all of this, and why the change in stance that they have is because of the digital first brands, or what you say in terms of digital first brands versus the older brands, how that is moving out as well. When you're seeing that digital first brands are much easy to develop, but for bigger companies, they've been the traditional companies, how they are shaping it in terms of that, they've increased their ad spends, the number of launches that they're doing. Focus coming in for the digital side is what spending more money on. Now, obviously, there's a big gap when you see a digital first brand versus the incumbents, and now that gap is reducing because they're trying new ways to actually increase their digital sales. So, Digital Disruption Index by Macquarie, which they've started, their ranking comes in on premium skincare as well as hair care categories, which are at high risk in terms of disruption that one could watch out for. Other than that, the gap between incumbents as well as digital first brands has now started to moderate. So, yes, positive signs coming in. And that is why what they believe is Macquarie, they could see an outperform rating there, but they've cut the target price for Marico over there, I beg your pardon. HUL also, they've cut the target price, Dabur as well as Britannia, being the incumbents versus digital first brands. They still feel there's a bit of a gap and they would have to still do more ad spends versus digital players.
Okay, thanks very much, Vinny, for filling us in with all those details. Meantime, let's also take stock of some of the movers on the charts then in yesterday's trading day. Just going to have some of those come up for you on your screen within the broader universe as well, because do remember that we have seen the broader end of the market yesterday at least outperform. It was a gain of about 1% as compared to the frontliners, which absolutely were laying low. On the charts, you had a Capri Global 16.6% on that one, some like a Gulf Oil Lubricants as well soared in yesterday's trading session. Cochin Shipyard was rather active, a 9% gain. Serra Sanitary, double-digit gains on that stock, while a PNB2 was added to that list along with the likes of an Infibeam and JSW Energy. Naresh, let's get in your take on the charts of any of these stocks that are looking promising.
So JSW Energy is something which looks interesting for the fact that after the consolidation for 2 years between 2021 to 23, it's been a strong uptrend. After making the breakout, the stock went to 530, consolidated there. Yesterday was a large volume take, even after the QIP announcement. So out here, this becomes a buy on dips to 550 odd levels, with a view that the stock could go towards 650.
Right. Okay. Avenue Supermarts, we just flagged off what their quarterly update is like. And Chakri, I want your comments in over here because the standalone revenue has seen an uptick of 20% on year-on-year basis. But what really stands out is the aggressive expansion and the kind of store addition that they've seen, wherein pretty much what they did all of FY24, they're planning to do in the first quarter of this financial year itself. They've already added 24 stores.
Yeah, absolutely right. In terms of, their store expansion, which was a concern, has come back, which is a good thing. The volume growth is kind of also back. So two good things. But the third thing is the stock has already kind of trades at about 60 times multiple, which kind of reflects all the improvements that you were to expect. So, I wouldn't really be chasing Avenue supermarkets at 60 times multiple right now.
All right, fair enough. That's the view coming in on Avenue Supermarts, a newsmaker in trade. Chakri, just wondering how you're looking at things building up within the entire real estate space. If you had to nail it down to some of the top recommendations, what would it be?
You mentioned Brigade and also Prestige. I think the company is extremely well positioned in the current outlook because of the demand from commercial as well as residential. And also, there's some work going on within the hospitality space. So there might be some valuation and unlocking over there. And so I think these are Prestige and Shobha still look good.
Why do they look good? I mean, what is the benchmark for you to say they look good?
Yeah, Prestige is clearly simply because of those three factors, which is one is commercial, second is residential, both very strong activity as well as, their new product launches. Third is there's going to be some amount of value unlocking in their hospitality space. Hospitality trades at a far higher valuation. And so as that unlocking happens, Prestige will benefit from that.
Chakri, tell us a bit more about your top three holdings.
We've been focusing mainly in the pickup and manufacturing. Now, TND has, with this huge amount of power demand as well as expected pickup in CapEx, one of the main beneficiaries also in that space, value chain down, is the TND companies. TND companies like, Skipper is one of the largest companies globally and in India in TND, and they are present not just in manufacturing, but also in EPC. The stock has valuations are in its side. Demand is weak last 2 years for well-known reasons. Previous to that, COVID, etc. So now, as the cycle picks up, second is JTL Infra again in the manufacturing theme. All these electric pipes are usually used in, as you know, both in construction as well as in industrial activity, and they have done a huge. They're doing a capacity expansion to meet the demand, and I think again, valuations are on its side. So these are the themes which largely revolve around manufacturing and capex.
If you like this video, then like, share and subscribe to ET Now.